Thailand's once thriving economy is now in trouble. Sluggish global demand and political turmoil are threatening to derail Southeast Asia's second largest economy. The government has already cut its 2015 growth forecast to 3% and 4%. Falling exports are one of the main factors due to the economic slowdown in both China and Japan. Exports make up roughly 2/3 of Thailand's economy. The tourism industry shrank nearly 7% after the Thai military coup last year, but it's rebounding. The government's stimulus efforts haven't had any effect yet. Now, low-income families who are struggling to make ends meet usually can't rely on regular banks to get a loan. That is why a lot of them are turning to the so-called shadow banking. What is it? It's an informal, unregulated part of the financial industry. It provides loans to those who don't have access to regular financing or perhaps don't qualify. But unlike their bigger and more stable counterparts, shadow banks lack regulation and oversight. They don't take deposits and are less strict when approving loans, which leads to volatility. And since it's unregulated, nobody knows how big the industry is. But to head off trouble, some countries, China for example, are trying to rein it in. The European Central Bank has warned that shadow banking's rapid growth could destabilize the Eurozone's financial stability. Now, one of the countries experiencing an uptick in this shadow banking is Thailand. And some believe the risk, well, may be worth it. Tony Chang explains.
It's been a tough year for farmers in Thailand. A generous rice subsidy was cut, irrigation has been sporadic after fears of a drought, and commodity prices have dropped. Chot has exhausted all of his savings and is going to have to take a loan to get him through till the harvest.
It's unbearable. Everything is so expensive. Very expensive. Even limes are now 50 cents each. 50 cents.
In the past, options for farmers like Chot were limited. Only loan sharks were willing to lend to lower-income individuals, and that was coupled with crippling interest rates. But the Thai government's just approved licenses for 4 new shadow banks for people who would normally be turned down for loans.
We look at this as an opportunity for them, for people to access loans so that as to increase the production. In the past, this group of people, they don't have any access. They just rely on some sort of loan shark. So the interest rate is much higher.
Loans from the non-banking sector have risen dramatically across Asia in the past 12 months. In Thailand, they account for nearly 1/3 of all household loans. And there's concern about rising levels of borrowing and the impact that might have on the health of these developing economies. One of the big problems in Thailand is household debt. In 2003, it was just under 40% of GDP. 12 years later, and it's almost doubled. It has one of the highest levels of household debt in this region, and is only slightly less than that of the United States. In particular, in Thailand, those who need to borrow most at the moment are those who are least able to repay their debt. And targeting lower-income workers could lead to a sharp increase in non-performing loans.
This group of people have low farm income since the mid of last year. Agricultural prices dropped significantly. So that means that going forward, this group of people still don't have enough money to increase their consumption that much. So this is a risk that NPL could go up higher.
But the Thai economy does need a boost. Since the military coup, growth predictions have been scaled back and exports have dropped. The government's hoping the shadow banks might help them inject some cash back into the system. Tony Chang, CCTV, Bangkok.